Hello everybody, San here, engineer, MBA, and investor. And in today's video, I want to talk about why we are in for a long run when it comes to the market recession, market crash, whatever you want to call it. Don't be fooled by today's price action. I know there's a lot of green, lots of greens on your stock prices, but trust me, this may be not what you're thinking for many reasons that I want to talk about, at least a few reasons in this video. But before we do that, before you jump into this video, you guys know the drill. Like this video, smash the like button, destroy that like button, subscribe if you're not subscribed, and do leave me a comment below what you guys think about this market crash, how long it'll potentially be. So, before we even talk about, the market prices, the market trends rather, I do want to talk about some of the price action. So Apple up 2.3%, Airbnb up 3.5%, Amazon 4%. You have Tesla up, let's take a look, 7.4%. You have Netflix up almost 2%. You have Meta up 4%, and you have Google up 2.3%, Microsoft up 1% and a half, and Block up 7% almost. So lots of price green action today. I think a lot of people got a relief here. I think for a couple of days straight, we were in the red negative, or at least very small percentage green, and then back significant red. So lots of pain for people's portfolio. But guys, this may be very well be what we call in the markets a dead cat bounce, right? A dead cat bounce. What that is basically market crashes, and then for maybe a day, maybe a couple of days, maybe even a week, you get this huge spike, and then things are looking like it's going to be back in a bull run. Unfortunately, it crashes back down. That's what we call a dead cat bounce. It's basically a dead cat bounce. It's like a fake life hope that you get momentarily, basically giving you the idea that the markets are going back in a bull run. But I can guarantee you guys, we are still in a bear market. We are still in a quote-unquote recession. This is a market crash, and this is going to last much longer than just 6 to 7 months. So again, as a reminder, it's the whole S&P 500 and all the big stocks and all the stocks at this point in the stock market have been in a crash since late 2021. Basically late November, early December of 2021 is when we peaked for most stocks, especially for the big tech companies. And ever since then, it's been crashing, right? And if you take a look at back in 2000 in the dot-com boom, and if you take a look at the crash, of course, in 2000, but also the 2008 great financial recession after the housing crash, you'll see that it took a lot more than 5-6 months, guys. The dot-com boom, I think it was like 4 years before we started breaking even from all-time highs, and then things started picking back up until 2008 when it crashed all the way back down. And then it took another 4 years about to really be back in this bull run. So that means 2008 to 2011. I think it was 2011, late 2011, early part 2012, when the S&P 500 reached back to its all-time highs for the first time since 2008. So that's about 3 to 4 years. And if you I'm not saying just because those two latest crashes, that's the behavior you're gonna get, in this crash. But I really think it's gonna be a lot longer than just 6-7 months. I think this market is going to be in this bear market for a couple of more months. You'll see a lot of stocks trading sideways. You'll see these weird dead cat bounce, and then you'll see another decline for a couple of days straight. I think that's part of the bear market. That's part of a crash. That's part of a recession. Things always look, you're always looking for positivity. But even in the news of positivity, you'll get these weird bounces. But then, after a couple of days or even weeks, it'll go back down, right? People forget that, it's easy back then now to say, oh yeah, 2008. Yeah, of course we recovered. Yeah, because that was basically 14 years ago. It's easy to say that, but when you're living in 2008, in 2009, in 2010, it's very hard for you to grasp your mind around. Imagine if you had invested in the peak of the market. And basically, by the way, peak of the market does not mean investing literally at the peak. It could mean like investing a month before the peak, or even 6 months before the peak. Because even if you had invested 6 months before the peak in 2008, it would take you about 3.5 years to really recover where your investments were. So of course, the opportunity cost a dilemma comes into your mind during that time. I mean, myself going through the whole Bitcoin saga in 2017, I know how hard it is. 2017, 2018, 2019, you have this question, this opportunity cost. What if I had kept this money, invested in Tesla, invested in Apple, invested in other companies in the tech market? I'd be up like twice, as opposed to being down like 60 to 80%. Bitcoin was down at some point during those years that I just mentioned. So that's just one example. But again, I think we are in for a long run, guys. I want you guys to be patient. I want you guys to really look at the big picture. I mean, it sort of goes against what I've been talking about, not looking at the daily price action, but I'm sort of obliged to sort of make this type of video because I get all these questions from people. Say, hey, is this the right time to invest? I mean, look, guys, I'm biased. Some of these companies you guys ask me about, CRISPR companies, of course I'm going to say yes. These valuations are crazy. I mean, you have Caribou's that's worth like 400 million. You have NTLA, CRISPR Therapeutics, Beam Therapeutics that are worth less than 70, 80% from their peaks. You have Teladoc that's worth like freaking like less than $4 billion, which is crazy. I mean, there are so many opportunities. But again, no one's a wizard. No one can predict the future. No one can tell you for sure what's going to happen in the next 4, 5, 6 months or even a year or 2 years. But what I can tell you, that science doesn't lie. And that if the fundamentals have not changed, so if you have good data in CRISPR landscape, for example, good data, good leadership, and you sort of, follow through these macro environments. I mean, look, guys, if there's going to be, a huge macro terrific event, then I'm going to take a guess that your portfolio will be one of your least worries, right? Think about your food shortage. Think about housing crisis. Think about, immigration, refugee status. And think about all of that, water status. I mean, people take this for granted, having water, clean water, in a nuclear war or something along those lines. Those, things you take granted are going to be taken away. And I doubt those stock prices will be one of your priorities at that point. But again, I'm going on a tangent here. But my point here is that I want you guys to look at the long term. Don't be fooled by these little green price action. I mean, it feels good. I know this is a dopamine rush. But again, the things that make you feel good short term are often not the things that make you feel good in the long term. So don't forget about that. It is what it is. I'll end this video like this. Thank you so much for watching, guys. Tomorrow in the future video, we'll try to go a little bit more scientific with researching something about the CRISPR landscape. We'll take a look. So thank you so much for watching. Like this video if you have value. Subscribe if you're not. And I'll see you guys in the next video. Thank you.